Welcome, everybody. I'm Rick Edelman. Thanks for joining us for this really interesting conversation we're going to have. Very timely, very topical, and really rather urgent. What the election results mean for crypto. A lot's been going on ever since the presidential election occurred in November, and we're going to delve right into it. I'm very happy to be joined in this conversation by Steve Kurz, who's the global head of asset management at Galaxy. Steve, of course, has been really first from the TradFi world. He was vice president at Fortress Investment Group before moving over to the crypto space. So you're one of the few, Steve, that made the leap from traditional Wall Street over to the crypto environment. So I'm really glad that you're here with us today. And Steve has really built himself into one of the most respected and well-known people in the crypto community. But Steve, not necessarily everybody's really terribly familiar with Galaxy itself, even though Galaxy's been deep in the space for so many years and one of the largest crypto asset management firms. Tell us a little bit about Galaxy.
Yeah, well, thanks, Rick, and thanks for the kind introduction. Thanks for your time, everyone, today. It is really quite a day to be having this conversation. In many ways, today is what Galaxy has been built for 7 years ago. And so 7 years ago, Mike Novogratz, who's our CEO, a macro TradFi, as Rick said, Maven, really had an early Bitcoin position, but then turned that into the idea for and ultimately, Galaxy becoming an ecosystem company in crypto. So today we're a 500-person publicly traded crypto company that is focused on basically all of the on-ramping of institutions into crypto. So we're an institutional business. We're traded on the TSX in Canada, and we have 3 different big business lines, all of which have that same underlying philosophy. We've got the asset manager, as Rick mentioned, which we'll talk about today, so I won't go into that now. But we've also got an infrastructure business and a trading business. The trading business looks very much like a sell-side bank. Think of a Goldman Sachs or a JP Morgan, where we offer spot trading for clients. We have a prime services underpinning to the business, lending, derivatives, basically any way to hedge or access crypto directly can be done through our global trading market trading business. And then on the infrastructure side, what's interesting is we built this infrastructure business thinking that would future-proof our traditional looking businesses, right? Asset management looks like a buy side, trading looks like a sell side. Infrastructure was more crypto native. That was staking and Bitcoin mining and tokenization and custody. And really, when we look at the map today, those infrastructure pieces are actually becoming a part of our businesses faster than we ever thought before. So we can unpack some of that. But our goal at Gal has always been to educate, to be responsible actors in the space, which really made a big difference 4 years ago before we had all of the momentum that we have today. And obviously now it's really about capturing the moment and really bringing it all together in an integrated fashion with the markets as they are.
And in fact, capturing the moment is really the operative term here, isn't it? Because Bitcoin has been generating an awful lot of attention lately, and for all the right reasons. Last year it was up about 150%. This year it's up about 150%. A 50% increase simply since the election of Donald Trump. So we're going to unpack all of this. A lot of you have already sent in questions, and I'm going to pepper them in our conversation with Steve. Also, if you have questions as a result of what you hear he and I talking about, just go to the Q&A box at the bottom here on Zoom, type them in. I'll be curating that as we go and adding them to Steve as well. And so we have to talk, Steve, at the very beginning, which is the election results. We have obviously seen the excitement in crypto since the election because Donald Trump made it very clear throughout his campaign that he was a strong supporter of crypto, that he said at Bitcoin 24 in Nashville, where I also spoke, that he was going to fire Gary Gensler on day one. He has now appointed Gensler's successor, Paul Atkins, to be the new SEC chair. He has appointed or nominated at least David Sachs to be the new AI and crypto czar. He has appointed Scott Bessent or nominated him as the Treasury Secretary, Howard Lutnick as the Commerce Secretary, Kelly Loeffler as the new SBA chief. All of these folks are very strongly associated with the crypto community, very supportive of the crypto community, and it was because of all of this, everybody's so super excited about what all this means. So talk about the implication of Trump's election, the people he's appointing, what that portends for Bitcoin in 2025.
What a question. Yeah, and it's true. I mean, it makes your head spin just how quickly that's happened, but also the breadth and depth of supporters of the space that have, and it's not just that moment, it's where we came from. So it's been less than 2 years since FTX, and it's been less than 2 years since many in the government have been trying to move in the other direction on crypto. And so if that was one outer bound, we've come all the way. Basically, the headwind to tailwind dynamic has shifted entirely 180 degrees. Just to round out some of what you mentioned, Rick, I think 275 House members of Congress are now openly supportive of crypto. So a majority in the House on a bipartisan basis. Incoming Majority Leader Thune received an A from the Stand with Crypto independent rankings. Even the Doge, Elon and Vivek have been public about their support for crypto, and they both own Bitcoin. RFK Jr. has most of his net worth in Bitcoin. JD Vance as well, and so you can keep going, but the point is that this is an administration that's long crypto physically and long crypto intellectually. And so I think what it does is it dramatically de-risks the idea that this space is going away as a starting point. When we had these conversations 5 or 6 years ago, there was a very valid question of what does it mean for escape velocity? What does it mean for crypto to get to a place, or Bitcoin to get to a place where it's part of the fabric? And I think we've reached the moment where that is off the table. Bitcoin is currently the 7th largest asset in the world. Ethereum is the 26th largest asset in the world. And more importantly than any one asset, we're seeing things like tokenization take hold. We've seen the Bitcoin ETFs really integrate into the wealth community and the retail buyer base. So people generationally are understanding this, and it's becoming a much bigger part of our system, not in the way that crypto wanted it to happen, but in the way that the traditional infrastructure would always have brought it in. And so I think what you're going to see more of in the Trump administration is exactly that. You're going to see boring stuff, in-kind create and redeem on the ETFs. You're going to see staking probably happen on the Ethereum ETF. You'll probably see more ETFs like Ethereum and Bitcoin into other crypto assets. But what's going to be really predicating all of that is the regulatory clarity, obviously, that we've been waiting for. Now, what's not going to happen on day one is I don't think we wake up on January 21st and suddenly we have a market structure bill and suddenly we have a stablecoin bill. In many ways, the Republican sweep has actually pushed back crypto regulation. There are so many things that a unified Republican Party needs to deal with, whether it's trade, or there are 5 or 6 sort of day one priorities. Crypto probably is a little further down the stack. So while you will see regulation later in the year, or maybe in the middle of the year, you'll have a lot of the tone shifting early in the year. You'll have some executive actions out of the gates that should really start to clear the decks for adoption to happen and for some other of these themes to start to take hold.
It's interesting you mentioned that in a counterintuitive way, the incredibly strong support of the Trump administration and the incoming Congress is going to actually slow down the legislation. That fits in with what Hester Peirce has been saying. Hester, of course, widely known as Crypto Mom, an SEC commissioner who has been very, very strongly supportive of crypto throughout her tenure at the SEC, has been rather vocal the past month and a half, ever since the election, saying, whoa, we're not so sure, she says, that the SEC has the manpower, has the in-house expertise, has the capacity to bring about the regulations that everybody has been clamoring for and now, frankly, expecting the new SEC to provide. So I think what we need is to temper our enthusiasm, basically, is what you're saying.
Yeah, there's a little bit of that. Now, there are ways that they can, and by the way, that fact is, I think, both true and also instructive. The crypto community loves to hate on the prior SEC, but a different way of looking at that is they needed to get up the curve. There were staffing concerns with doing that, and there are priorities always. Now, some of what has happened in the past has been regulation by enforcement. You've had staff accounting bulletins. To the extent that you repeal those and it allows a Bank of New York to participate in the crypto space, or no action letters that allow for some of the better, self-regulated entities like Galaxy or Coinbase or others in the U.S. market to start to operate in a way that's consistent with where we all see the regulatory center of gravity moving, I think that would be a very constructive middle ground.
Yeah.
And it doesn't mean that you can't, for instance, have a wave of IPOs start to happen in the crypto space. It's public that Galaxy is looking as an example to move from the Canadian exchange to the NASDAQ in the US. There are many dozens of companies that are doing that. We've already seen M&A in the space in the last few months. I think you'll see more of that into the first quarter. So I don't mean to say there isn't a lot of activity or that there's nothing to do, but I do think that we're in the middle of a very exciting period between an election and the end of the year, and maybe when we wake up in January, the exercise is to think, okay, what's going to happen next, and what's the sequencing of some of this stuff.
So, in fact, we are looking at the notion that the regulatory environment, will come about, but it'll come about eventually. Like you said, we've got to unwind some of the existing stuff. You mentioned the custody. One of the big complaints that the crypto community has had over the Biden administration tenure has been what is being referred to as Operation Choke Point. The notion that the Biden administration has basically laid down so many obstacles that have prevented the traditional financial sector, the banking industry particularly, from engaging in crypto. That Gensler refused to create any regulation providing clarity for what traditional financial service firms are allowed to do or not allowed to do, or how they're allowed to go about doing it. One of these big ones is called SAB 121. So elaborate for folks who may be not as familiar about this of what that rule did, what it prohibited banks from doing, and why you think that's going to go away pretty quickly in a Trump administration.
Yeah, sure. And we don't have to belabor the prior point about choke point 2.0. It caught Twitter fire when Joe Rogan recently did an interview with Andreessen Horowitz's main partner. And I would just say that as an American who's patriotic and loves our country and ignoring politics, that happened, and it wasn't based on law. It happened to us. It happened to others. Many smaller companies in crypto were unable to get banked after they had their banks pull back, not through any legislative framework, but through a whisper. And that ended up being really bad for our space. The larger companies in our space were able to survive because they had larger banking relationships, or were able to find other ways to withstand.
Short answer is, under the Biden administration, crypto companies found it difficult, if not impossible, to open a bank account.
That's exactly right. Yeah.
And if you can't have a bank account, you can't do business. How do you handle, income and expenses? How do you handle payroll? How do et cetera? And
Correct.
this was the Biden administration's way of shutting crypto companies down by they did the same thing with cannabis.
Correct.
And simply not letting them do business. So that was one big issue. Related to that is custody. And banks are precluded from engaging in crypto custody because of this SAB 121. Right. So elaborate on that.
And I'll comment on that. I mean, and it's actually a pretty obscure that, 121, there are 121 staff accounting bulletins, and they're used for various means, but never have they been used to create a de facto regulation that didn't exist or that wasn't based in law previously. So SAB 121 effectively used accounting techniques to make it very expensive, prohibitively expensive, for banks to be holding crypto on their balance sheet. And more important than the bulletin itself was the point of having issued the bulletin, and the unusualness of the bulletin, and therefore the suggestiveness to the banks, who have to obviously report into their prudential regulators, of what they should and should not be doing around crypto. So the combination of that really put a chill on any bank that's under any of the U.S. regulators, but really the OCC in particular, the Department of Financial Services in New York. So very large, powerful regulators that were just a categorical no de facto through this SAB 121 bulletin. Something very interesting happened even before Trump's election over the summer, which is that a number of politicians on the Democrat side, including Leader Schumer, actually went against the Biden administration on 121. And so while it went to Biden's desk in a bipartisan way to veto this on the basis that it was simply wrong, Biden actually did not overturn it. He stayed with his SEC, but you can't unsee 71 members of the Democratic Party in an election year, in the summer before the election, moving across the aisle on something like this. And I think that shows you just, it's very easy to see the Republican wave through one lens. The reality is, even before, and even if Harris had won, we were seeing does the Democratic Party really want to be an anti-crypto party? Our answer was no. We didn't think the Harris campaign was no. And so when you put that together with all these new people coming into the administration, I think you'll be surprised by how quickly the tide can turn in terms of overturning SAB 121.
So just to put an exclamation point on this, Biden administration basically, through 121 said banks cannot custody crypto, which keeps
Yes.
banks out of the engagement. They
Yes.
can't buy it, sell it, trade it, do anything for their customers regarding crypto. The Congress was so unhappy with that, they passed a bill to overturn that rule,
Correct.
and
Yes.
Biden vetoed the bill,
Yes.
which just demonstrated how anti-crypto Joe Biden and Gary Gensler were, with the support of people like Elizabeth Warren and Bernie Sanders and others. Uh, Now that they're going to be gone January 20 and the Republicans are in control of Congress, not to mention more than half of Democrats are supportive of crypto and the entire Trump administration supportive, everybody's widely expecting that 121 is going to be thrown away, and banks, just picture this, Bank of America, Chase, Wells Fargo, are all going to be able suddenly, for the first time ever, to custody Bitcoin. Just imagine the entry of the biggest banks in the world being able to do what companies like Galaxy and Coinbase have been doing for the past 7 years. Just imagine the sudden announcements from Bank of America and Chase and Wells to their own retail customers, let alone their institutional investors. Hey, we can help you buy Bitcoin. We can hold it for you. We can store it for you. If you don't think this is going to result in a massive inflow of assets and an amount of investor engagement, you ain't seen nothing yet.
I mean, Rick, I was the one with that enthusiasm a few years ago, and I almost have to pinch myself because we've been so beaten down that it's hard to be as enthusiastic. But I agree with everything you said, and it just you don't put the genie back in the bottle with that. And it's not one thing. It's the regulations that are following. It's the animal spirits that are behind that. It's it's actually what's actually more exciting to me. All these companies that got pushed offshore. We saw it. The number of blockchain engineers that left the U.S. We had a 43% market share in blockchain engineers in the US. And through the last few years, that came down into the mid to low 20s. And that's bad for America. It just objectively is. Forget Bitcoin or any one asset. This technology is important for a lot of reasons. And we're already starting to see in the last month people wanting to come to New York to build companies. And that is just a really cool thing to see happen.
We're talking about high paying green jobs.
Yeah.
Why would the Biden administration oppose that? It was illogical on its face.
Yeah.
So how does
Well,
all this
it was a political mistake too, Rick. I mean, look at what happened, I think is a way to say it.
As I said earlier on one of my podcasts, that any member of Congress who opposes crypto does so at their own peril, because it is now very clear that the voters want congressional support of crypto, and the crypto PACs prove themselves so capable and influential in the campaign, having brought about the election of Bernie Moreno, among others, and the defeat of other anti-crypto candidates, that you're right, this is now a movement that has gained incredible traction and is going to persist for at least the next couple of years till the midterms.
On both sides of the aisle, I want to add that,
Yes.
these bipartisan pushes, and in both cases it swung the other way because of the crypto PACs.
As with every other major lobby, big pharma, agriculture, banking, real estate, you name it, they don't care what party the member of Congress is in. They care whether the member of Congress supports their causes. So you're right, it's clearly bipartisan. So translate for us, Steve, what all this means for institutional adoption. Where have we been? What percentage of institutions have been buying Bitcoin? And what do you see them doing going into 25?
Yeah, this is one of the most exciting parts about it. I mean, as an asset manager, right? That's what I spend most of my time on. We're an SEC registered asset manager. For 7 years. We've been trying to build crypto and crypto adjacent products, which has been a really difficult thing to do. As you can imagine, we've gone through multiple SEC exams, and so we've been very conservative in the products that we've brought to market. But we've had a front row seat to the institutional adoption conversations. If you start with hedge funds, just as an example, 2 years ago, about 1/4 of U.S. hedge funds had any exposure to crypto. And so when you and by the way, that's probably tens of trillions of dollars of total AUM. Excuse me.
That they manage, not that they invested.
So I'm sorry, 10, correct, exactly. That they manage it in total. And last year, that was closer to 45%, and it's now over 50%. So in just 18 months, we've seen the hedge fund community broadly go from, oh my gosh, we can't touch this because we have to change our investor docs and our LPs may fire us if we do that, to this is a way to generate alpha, to wow, all my competitors are doing it, I better be doing it. And the tide has really shifted. So I think that's a microcosm in a much faster way than what's going to happen to the larger, more important $100 trillion allocator class. That $100 trillion allocator class has broadly sat out crypto. Maybe some of the endowments and foundations have taken a venture bet. Some of them have put some money into Bitcoin, but broadly they've been looking to their gatekeepers, which have been the Allborn consultants of the world, the Mercers of the world, the NEPCs that really have to do investment due diligence and operational due diligence. And that process really started kicking off in the summer of last year. And so if you asked any one of those gatekeepers, how many inbounds have you got in from all of your thousands of relationships? About 18 months ago, they'd say sub 10, literally sub 10 inbounds all year globally. If you ask them in the summer of this year, it would be dozens. It's now up to hundreds, and they're doing work on both the investment diligence side and the operational due diligence side. And in many cases, they've already approved funds to be invested into various crypto funds. That process takes 6 to 12 months. So if I were guessing when you'd see dollars flow in from large allocators, you'd be really looking at the second quarter of next year into the third quarter. We've seen some very good starting points. State of Wisconsin Investment Board has put money into Bitcoin. You've seen the same in Michigan. It's happening in New Jersey as well. So there's pockets of those that are moving in, but it really has not become a groundswell yet. And I think that's a big opportunity if you're looking at this space for the first time right now.
People are sometimes surprised at why second half of 2025 is it going to take to start to see asset flows. People sometimes forget the bureaucratic approach that pension funds and endowments take. First, as you said, you got to go through the due diligence process with the investment committee. After they finally complete that, which takes months, they then have to vote, and then they have to submit their proposal to the board, which only meets quarterly. So by the time they get through all this, it's going to be the Q3 board meeting before they get the approval to execute. And that's assuming they're moving fast. And let's keep in mind the crypto allocation. You tell me, what is it you're anticipating that these boards are going to say yes to? I'm assuming under 10% allocation.
I would anchor at 3 to 5%, and what's really exciting about today though is that it's not all just a Bitcoin exposure. So you can say, hey, we want to have a little bit on the active side, a little bit on the venture side, a little bit in the ETFs, and put a blended portfolio together. That conversation couldn't even happen a year ago, literally.
And so not only is it going to take them the next 9 months, if they hurry, if they really focus, if it's only a 3 to 5% allocation, they're frankly more focused on the 97% that they're not dealing with crypto. They got more important topics to talk about. And so this might not be a high priority.
Very similar to the SEC, right? The SEC is going to focus on trade with China, or the government, excuse me, the Republican government, not the SEC. The entire Republican establishment has 5 or 6 things they've got to get through, just like everyone's got to get through their portfolio. But they are going to circle back this time because there's the risk, forget the exposure that you're taking, the risk to not paying attention to where this technology going right now. You mentioned banks and asset managers. It's not existential yet, but it's getting to a place where you really do need to understand what does tokenization mean? What does custody mean? What is the timeline on which the world is going to be coming on chain, right? On chain stats have gone up through stablecoin usage. That's going to continue. 190 trillion of global cross-border payments. That is a market that's ripe for disintermediation. We finally have the products, the scale, and soon to be the regulatory. You're going to be very surprised in some of these venture-backed companies with how quickly stablecoin adoption is going to happen on the back of that. That's a big threat to banks.
And which is why banks are so excited and clamoring for permission to enter the space, because they don't want to lose that market share.
Correct. And part of this thing, again, to be apolitical about it, part of it was we're slowing it down so we can understand it and figure out how to make it part of our business model. If you're JP Morgan, which that's a story as old as time. That's just a competitive response. That is now no longer an option, is the way that those banks have to think about this.
So if it means that we're not going to see asset flows from institutions for the better part of a year, because the early adopters will be next fall, and then others will follow, like you said, FOMO will set in, and on and on and on. Does that mean that, again, we need to temper our enthusiasm? The asset flows aren't going to be instantaneous. And does that therefore translate? Don't expect much in the way of price increases in Bitcoin. And in fact, you might as well just sit back and wait for that engagement to occur. Or do you take the attitude now, therefore, is the time to invest before those folks show up? What do we do?
I certainly think there's an element of getting in front of it. But I also think that the and this is to be charitable. It's very hard when Bitcoin goes up. You feel like you're buying at the high, and we've had this conversation at 10,000. We've had this conversation at 20,000. We've had this conversation at 60,000. And it's a hard thing to do, and I understand that. But what's very important to understand about Bitcoin in particular is that the price is just the output. So what you need to look at, as always, is supply and demand. Demand continues to be 21 million Bitcoin, and supply continues to be 21 million Bitcoin. And demand is not just about those institutions. Rick and I have talked at length about the wealth space. The wealth space is only just now turning on for soliciting Bitcoin ETFs. So you've had $175 billion come in total over all crypto ETFs. That's the current balance of all global crypto ETFs, US Bitcoin ETF, European products, everything together. And that's broadly happened without the $50 trillion US wealth market, which is even different from the 100 trillion of the allocator market that I mentioned. I think that $50 trillion wealth market is much closer to putting money into Bitcoin and maybe Ethereum than those institutional allocators. So you're not alone if you're putting money in the next few months and waiting for the pensions, but you are rather part of a much smoother than ever before adoption curve that includes corporate balance sheets, government balance sheets, institutional wealth, and then behind that, I think some of the pension allocators. I think that's sort of the curve of allocation from where we are today.
So you raised an interesting point that you've had conversations when Bitcoin was 3,000, 20,000, 60,000, each time people saying, oh, it's the high. How do I buy at the high?
Yeah.
It's too late. And certainly at 100,000, it's easy for someone to say it's too late. And there's a related statement that people have to make. Not only do you have to say to yourself at Bitcoin 100,000, even though it dropped just before this webinar began.
Yeah, I saw. Yeah.
Thanks, Steve. Appreciate
it. Sorry.
So not only do you have to say at Bitcoin 100,000, it's too late, you also have to say, I have to admit I was wrong. And both of those statements are really hard for people to make. And how do you respond? How do you say to somebody, it's okay to say you were wrong. Don't feel bad. Everybody was wrong on this. It was a rare person, Mike Novogratz or Rick Edelman were really unusual having gotten into this in 2012. That was not the norm. It's okay to say, oh, well, I missed it. And that although this is the high, you can say that about everything. The stock market's at a high right now, by the way.
Yeah.
The real estate market's at a high, by the way, on residential real estate, and so on. So how do you help people overcome those two problems that prevent them from saying, I'm going to start to engage?
It's a great question. I mean, first of all, you're still here doing this. Mike's still here running our company. We're all, I mean, the Bitcoin is has something special that has resilience and is community based and clearly has a foundation. I think that's important. But I think it's also important to just, again, forget price for a second. Less than 1% of the world owns Bitcoin. 100 million people own Bitcoin, and it's an 8 billion. So just first of all, think about where we are in the adoption curve. But maybe more instructively, when I go back to that league table of the top assets in the world, and Bitcoin's 7th, gold is first. And gold is 18 trillion and Bitcoin is still sub 2 trillion. I do think, it's worth, and everyone takes issues with all sides of this, but the best analogy that you can have for Bitcoin remains digital gold. And if you think about the generational turnover and, there's literally nobody under 40, maybe 10%, who think that there's a problem with Bitcoin. So the question is, forget the entry price. In the next 10 or 20 years, not in the next 1 month or 2 months or 6 months, where do you think Bitcoin should be as a percentage of gold's market cap? Today, it's about 10%. Should that be 50%, 30% over a generation? Can it become 100%? Can it beat gold? Doesn't mean it replaces it, but can it beat it on a market cap basis? I think if you think about it that way, and I guess if we got to 10 times, I mean, Bitcoin would be about 900,000 if it matched gold. That's a decent framework to think about the next phase of this, but you've actually de-risked it dramatically. So you're making a much better skewed bet. When you bought Bitcoin, when Rick bought Bitcoin, it could have gone to zero. When you bought Bitcoin, when I bought it, it could have gone to zero. It could have gone down 60%, 70%. It did. It's not that it can't do that now. It's that the awareness around Bitcoin and the whole ecosystem and the pipes into Bitcoin are so much stronger that there will also be buyers particularly when so few people have bought Bitcoin. There's a lot of capital that can buy the dip, so to speak. So your skew of a Bitcoin position right now, yes, you've probably got less velocity to the upside, but if you can make 2, 3, 4 times your money over 5+ years and your downside is 20, 30%, that's just a sizing question, is how I would think about that.
Yeah, I think that the number that people should invest is not zero.
Yeah, agree with that.
Beyond that, it's your call. But I think that those who do zero allocation are making a mistake. How much above zero should it be? That's for you to figure out,
Great.
like you do with every other investment question.
Yeah.
One other thing I'd like to mention is that in the context of, gee, I'd have to admit I was wrong. I wouldn't put it in the context of right and wrong. I would put it in the context of the decision you made at the time you made it, recognizing that times change, circumstances change. There are an awful lot of people who have changed their minds over the years. Perhaps most famously is Larry Fink at BlackRock, who in 2017 said the only thing Bitcoin is good for is criminal activity. And he, of course, very famously changed his mind to the point that BlackRock's Bitcoin ETF is now the largest of the spot Bitcoin ETFs. And they're engaged very heavily in a variety of areas of crypto. Is anybody criticizing Larry for changing his mind? They may be criticizing him for waiting so long to change his mind, but I don't think anybody's upset that he did. Look at Donald Trump as another great example. Trump in his
I
first
was just going to
term,
say, yeah,
he was a
exactly. Yep.
huge opponent of crypto. He thought crypto was a ridiculous concept, that it was eventually going to go away. And he changed his tune. Frankly, I would personally add he changed his tune, in my opinion, because he realized he can make money, raise political campaign contributions, and win votes
Great.
for it.
Yep.
Donald, let's face it, is a self-motivated individual. Whether he understands blockchain or not, I'm not sure, but who
Yep.
cares? The guy is clearly going to be continuing to support this. That's
Yep.
beneficial for the community. But he clearly did a 180, changing his mind about this. So you're allowed to do that. It's okay. The fact that you didn't want to buy Bitcoin, as you said, Steve, when Bitcoin was 3,000 or 15,000, that wasn't a mistake. That was a prudent decision. Based on what we knew at the time, the incredible risks associated, the question mark as to the viability, the sustainability of this as an asset class, you weren't any crazier to say no to Bitcoin at those prices than you were about Amazon in 1999. It took a lot of guts to buy Amazon back then, and I don't know too many people who did it. But today, everybody owns Amazon. It doesn't take a big amount of courage to buy Amazon. And that's kind of where we're headed in this conversation, no?
Yeah, I completely agree, and we've seen we've seen all stripes of this, and I think the grounding in what it, when you say no to something reflexively because it doesn't have cash flows, or because you get stuck in your own mind. The reality is Bitcoin is a macro asset in a world that needs a report card still, right? Look, like again, if you just go back to the foundation, why is gold up? That's the almost ignore what you thought before. Start with a clean slate. Look at the market structure of Bitcoin. Look at who's changed their mind before, and why does it fit in the portfolio. I think it's very hard at this point to argue for a 0% allocation if you approach that with a blank slate. I would be happy if there's anyone who wants to ask a question to debate that. That's a very legitimate debate to have. But I think it's a very different conversation today on every level than it was 4 years ago or 6 years ago. And that's because Bitcoin's evolved, and because politics have evolved, and because the infrastructure have evolved around Bitcoin, not because you were wrong 6 years ago, to Rick's point.
So I need to ask you about one of the more extreme ideas that has been put forth in this new coming
Yep.
Trump era. The
Yep.
notion of a Bitcoin strategic reserve. We have a gold reserve, it's Fort Knox, that the Fed uses. We have an oil reserve to protect our energy security. Trump has floated the idea of a Bitcoin strategic reserve. Actually, Senator Cynthia Lummis, who I interviewed on my podcast, talked about this at Bitcoin 2024, put a bill in Congress, which is there now, to create a Bitcoin strategic reserve.
Yep.
Explain to folks what it is, how it would work, and does this have any legs, or is this just one of those wacky out there ideas?
Well, Senator Lummis has been a big supporter of the space, and we're grateful for it. It's an interesting proposal. I think the idea. I mean, there's an accounting idea that's behind it too. Basically, the idea is the United States, in the same way that it bought a lot of gold, can buy a lot of Bitcoin, mark up its gold, use the ARB on the markups to then basically pay down the debt. is sort of the simple way to say it. I don't know about that. I think that there can be a sensible strategy for the U.S. government supporting and also owning Bitcoin. That doesn't necessarily mean that we have to have a Bitcoin strategic reserve that's sort of predicated on either replacing or complementing the U.S. dollar. I think it's, having seen in crypto how systems can be fragile, I'm nervous about putting that out there too aggressively, because I don't think the dollar needs to be buoyed by Bitcoin. I do agree we have a fiscal problem, and I do agree that we're three or four decades into a lot of profligacy that needs to be fixed. But I think the risk is, and maybe I'm not supposed to say this as a crypto industry guy, but the risk is you actually start to make the dollar look weak, and then it needs Bitcoin. And I don't think that's actually true about the US dollar. So what I would prefer for our politicians to do is to have a sensible strategy, just like we have other assets and oil and other things. And yes, we call that a strategic reserve, but it's not competing with the dollar that way. I think we should hold Bitcoin on our balance sheet like we do other assets. I think whether we like it or not, the fact that we have been talking about that so publicly has now triggered many other governments to start having the same conversation. And so I'm also nervous that if we choose to do that later, after they've done that, we put ourselves in a bad position. I think there's a sensible middle ground here. I really do. And yeah.
I'm also concerned that the predominant reason people are generating excitement about it is the assumption Bitcoin will rise, it'll skyrocket, and be enough to pay off our $36 trillion debt. I think that's a little silly. And it reminds me of George Bush 41's conversation of privatizing Social Security. Let's use the stock market to solve the Social Security crisis.
Agree.
That's all predicated on the stock market doing well. And, I guess the point is we should probably put that one to the side and not use it as a legitimate basis for making a decision to invest in any of this stuff.
I think so. Look, could it drive the price higher? Yeah, for sure could. I get it. I actually think if you want to talk about a risk to Bitcoin, you could go the other way and say there is a world where if Bitcoin's a report card, putting aside the strategic reserve, if it's a report card on the U.S. government, and if Besant comes in, and if the Doge guys come in, and they really start to clean up the fiscal components, that doesn't mean that Bitcoin is going to sell off. But one of the reasons that you want to hold one of many reasons, but a reason you might size up Bitcoin is if you're worried about that not happening, if you're worried about the inability to service debt or the long end of the yield curve going higher in yield as we need to refund those commitments. That's something to keep an eye on.
So one of the things I'm observing in all of this big conversation since the election is Bitcoin. You have people like Michael Saylor, a good friend of mine who you know so well, who is we refer to Mike as a Bitcoin maximalist. He's just all Bitcoin all the time. But there's Ethereum, there's Solana, there's Polygon and Algorand, there's a whole bunch of other major coins, and we should probably mention Doge coin as well, because with Musk and Vivek focusing on Doge, the government efficiency program under Trump. Talk about, is this going to be a rising tide scenario for crypto, or is this something you should be looking only at Bitcoin about? And what does all this mean?
Yeah, broadly, the money that comes into the space is going to help buoy the excitement. But I think one of the reasons you haven't had 20 coins that are in our lexicon versus 3 coins is because this security test, this Howey security test from the SEC, has made it so very difficult for there to be assets that can achieve a certain amount of scale. So I think you will see other assets becoming part of, let's call it the institutional world for crypto, not the thousands of meme coins that you see all the time, or the altcoins, or some people use worse words to describe those coins. We've always been focused on these large cap, and I think that accordion is going to expand. But I think equally exciting for us and hopefully for you as you think about allocating to the space, the accordion is also expanding for public market securities that access the crypto theme. So one of the reasons that we launched an active ETF partnership with State Street in October to prosecute the crypto theme, doesn't touch any cryptocurrencies at all, is that there are now over 300 securities globally that are adjacent to crypto or part of crypto, whether it's futures, options, corporate bonds, including converts, which we've seen a lot of activity in, ETFs, globally. And so that palette, that universe of investable assets has now achieved a scale where you can actually have active equity ETFs. So if you're not so comfortable with the coins themselves or with one coin because it's volatile, you can play the thematic through a regular actively traded ETF like the three that we have with State Street. That is very different than a year ago. The product suite and the market structure was not ready for that. Where we're going from here is going to be more coins and more securities. Remember, IPOs are happening, M&A is happening. So that investable universe of crypto is expanding very rapidly. It's why I think we're having a mini crypto asset management renaissance. I think in 5 years, what's a $200 billion industry, crypto asset management, 5, 6, 7, $800 billion of AUM is not a crazy conclusion. And that just means a lot more investable products to play the theme.
So you raised an issue of the different kinds of ETFs that are out there, not just those that are, the big spot Bitcoin and spot Ethereum ETFs, but also the picks and shovels ETFs as well. And I don't think a lot of folks are terribly familiar with the fact of all the extent to which Galaxy is involved. And I want to
I don't know
ask
if you're
you,
willing to share.
I'll bring this up, but I want to mention two broad categories. I want you to address both. One is, should an investor or an investment advisor buy the spot ETFs, or should they buy Bitcoin, Ethereum directly? And then active versus passive. What's the approach there? So tackle them one at a time. Talk about the ETFs versus direct ownership.
Yeah, I mean, this is a question we've been thinking about for even before the ETFs, because you had trust structures and all kinds of, how do you access Bitcoin? I think for most people, and again, this is not a crypto. Most crypto people don't say this, but I think the ETF is a pretty good option, and the reason for that is it's efficient. It sits in your portfolio. You can post it as collateral, so it's got a lot of benefits. It's simple from a tax perspective. That
you can
said,
easily rebalance it.
You can easily rebalance it, exactly. So as it sits in a portfolio, and so from the perspective of an FA, at least until we get to a world where physical crypto is integrated, which is going to happen, we're just not there yet. I think that ETFs are broadly the answer. The tracking errors and the fees on these are very small fees to pay because you had 12 issuers competing at the same time. So that benefit accrues to your end client. And these are all, I mean, we can go through the tiny nuances of each of them, but broadly speaking, these are all really well-run ETFs with really upstanding companies and trading teams behind them. So I think you can be comfortable with that. One reason that a client may want to have underlying Bitcoin held is simply that they own the asset themselves. So as a bearer asset, just like gold, you can hold your private keys. I don't know that they have to do all of their Bitcoin exposure that way, but if you had a view of the world, or if you had a view of the financial system, you could easily split the allocation. They could effectively keep it in a safe in their house, the way you'd keep a gold bar or money under your mattress, and you could have the majority of your exposure via an ETF, and that would be a fine thing to do as well. I do think that over time, physical Bitcoin is going to become just plugged into the front end dashboard that you have for all your client assets over the next few years.
Yeah, I think you're right about that. The easy way, people are constantly asking me, what's the best way I should do this? And I'm like, well, if you don't own individual stocks, why would you buy a Bitcoin mining stock? Just go buy an ETF that owns Bitcoin mining stocks. And if you don't own physical gold, why would you want to own Bitcoin directly? If you own GLD as your gold exposure, then clearly you should own an ETF for your Bitcoin exposure. I mean, why? You don't need to reinvent how you manage money to accommodate crypto.
Not at all. Only if you have that tail view, and if you do, just put a few private keys in your personal safe, and you're okay.
So talk about the active versus passive. Which way should people go?
Yeah, sure. Well, so I mean, so look, we've got five partnerships globally, and so we've done a mix of passive, active, and really everything in between.
And I'm going to bring up a slide that shows this.
I would love to show, because just to give you a sense of what's possible, in Canada, you can have multiple crypto ETFs like the one we have there, CMCX, or you can have single assets, or you can have the blockchain and metaverse indices, which are just equities. What I was mentioning earlier with State Street, we have these three equity active ETFs, which are very different than our Bitcoin and Ethereum ETFs and Invesco. I actually think a thoughtful allocation, if you just look at those top two buckets in the US, because I think most of this audience is focused on the US, I think having a mix of both passive and active is very smart. I think Bitcoin should probably be your bigger exposure. Ethereum, which we can talk about, is an up and comer that should have a really interesting year for the next year, and we can come back to that. But that active management, to your earlier point, Rick, this space is not going to be a straight line. We're very excited. We're very exuberant now because the prices are going up. But the reality is, there is going to be a moment where you need to cycle into other sub themes, right? One of the themes we're looking at in the active ETF is Bitcoin miners that want to become AI data centers. They're all saying they want to do it, and so their stocks are all going up, but not all of them are going to be able to execute. How do we know which ones are going to execute? We run a Bitcoin miner that's looking to become an AI data center, and so we know all the questions to ask. And I think the winners and losers is a great mini example of how you can tactically rotate out of things that have gone up too much and into things that are maybe not being paid attention to. So I think that probably half the allocation should be, or maybe just less than that, in active, and then you should have a core Bitcoin position, and then think about a little bit of Ethereum against that would be how I would recommend a starter allocation.
So there's one thing I want to point out here, because Steve, you're being a little too polite to say it overtly. So I'm going to say it for you. Uh, as we mentioned at the top of this, Galaxy is not really all that well known. Mike Novogratz is a pretty strong brand, obviously, with his background from Fortress on Wall Street, and deep in the crypto space. But here's just on this chart, there's something I want to make sure everybody really focuses in on. State Street is one of the largest and oldest asset managers in the world, frankly, and certainly in the country. State Street's managing what, close to 4 trillion
4
in
trillion. Yeah.
assets, and they're the inventors of the ETF. They were the first one to do it. They came out with GLD, the gold ETF, the first to do that, the first $1 billion gold ETF, which they did in just a couple of weeks. I think they raised $1 billion, and then the second billion, and the week after that, Invesco 1.7 trillion, I think, in assets. The home of QQQ, one of the most successful ETFs ever. I think it's one of the 5 largest ETFs. Between the two of them, we're talking almost 6 trillion in assets, global companies, incredible depth of talent at both of these organizations. And yet, when it came to entering the crypto space, both of them independently reached the conclusion, we don't have the in-house knowledge and expertise. And rather than trying to build it, they said, let's just partner with it. And when they decided to partner, they both independently decided to partner with Galaxy. And even after you partnered first with Invesco, State Street didn't say, oh, too late, Invesco's working with them. State Street said, what a brilliant idea, let's do it too. I think it just says an awful lot about what you're doing at Galaxy, that these two huge money management firms have chosen to work with you guys. I just wanted to
It's
mention
it's
that.
humbling. We appreciate it, and we're just getting started. And I think they both, in different ways, see this as the very beginning, and are very excited about the product roadmap from here. And I bet if we showed that chart in a year when we do this again, it'll look a lot more interesting. So you're going to have a lot more choices, hopefully, with Galaxy and our partners behind them. And I think what you need to do is get to that first plateau that makes you comfortable about the next 4 or 5 months, because it's really going to be a transformative period of time, and then the space will open up and there's more to talk about.
So I will also want to mention Steve has a lot of really cool slides with a lot of great data and insights that he wanted to share, and I wouldn't let him. So what we're going to do is um, publish a link right now for you in the chat box, so you can download the slides that Steve has. I encourage you to do that, because it's some really interesting and valuable data that will help you in your conversations as you're talking with clients or evaluating all of this on your own. So the link is right there in the chat box. Go do that. Got a great question from Kim. Kim, I'm sorry, from Eric. My bad for getting that wrong, Eric. Eric is a student at NYU, and he has an absolutely fabulous question. He says, I want to focus on the other side of the coin. What are the most significant risks that are facing the crypto industry over the next 3 to 5 years? Technological, regulatory, geopolitical. It's been a pretty, everybody in the crypto community is pretty optimistic, pretty bullish with the new administration coming in, Steve, but come on, this isn't a sure thing. There's a lot of black swans out there potentially, right? What are the risks?
Well, even the question belies one of the risks, right? When you say crypto, it's like it's a little bit like saying the internet, right? Like what are the risks to the internet? Well, there's many risks to the internet. There's many risks to crypto. Any one of the choices you make in investing in crypto might not be where adoption ultimately happens or product market fit happens, or so there's a selection bias within crypto that I think is important to hit out of the gates.
I'm one of the people who invested in BlockFi.
Yeah. Yeah.
So I was
Yeah.
absolutely correct about crypto, and I
Yeah.
lost my investment on BlockFi when the government killed
Yeah.
it. So
And
yeah,
I
you can
shouldn't
you
be
can be
flippant.
directionally correct, but precisely wrong.
And we also managed the FTX wind down, and we saw, unfortunately, that was at a even bigger level. Just the degree to which you can, yeah, a lot of people made a lot of money on the FTX platform, and the FTX platform went down. And so, yeah, there's that risk always, especially until we have the regulatory clarity that we need, and when things live offshore. There's a risk that it's just a back end technology, right? What if crypto ends up just being a few things, right? We've got some token digital rails in the future, and the banking system looks the same, and the incumbents come in, and it's just not that exciting. That's an interesting question, right? Crypto has always been promised to be this everything technology, and the mistake that the crypto community made 5-6 years ago was not being very clear about where we are in that journey. We needed the back end of crypto, the infrastructure of crypto, the deep tech that makes Bitcoin so robust. All of that stuff and the plumbing needed to be built before we could even think about identity use cases of blockchain to help AI, make sure that AI is saying me, I'm me, and Rick is Rick, and that we don't get screwed up on that. So the front end use cases of crypto are part of the story. They've been told incorrectly and at the wrong times. Now we're in a good place to go build that stuff, which means we're still years away from actually delivering on those breakout crypto apps that are outside of the financial services plumbing. The risk is we don't actually get there. I think we probably will.
Couple of questions we've gotten from some folks. One, he's still struggling with the fundamental question that has vexed everybody from Jamie Dimon to Warren Buffett. How do you justify Bitcoin's price when its inherent intrinsic value is zero? How do you respond to that?
Oh, the philosophical answer. I mean, the intrinsic value. I mean, if you don't accept that, a price has meaning because people are willing to pay for it, right? And the U.S. dollar is a construct, and gold is a construct, and Bitcoin is a construct. What I actually think is that it does have intrinsic value. I think that math and computer science sit behind Bitcoin. I think that Bitcoin's independence is inherently valuable. It's an abstract point, but I think, but how else do you explain 15 years, 10 years, 5 years, 3 years, 1 years of an asset that continues to prove itself when it's had the kitchen sink thrown at it so many times? So I think that report card piece is valuable. I don't think that valuation framework translates very easily into our mental models. And so I think there's a disconnect between those two things. But I think, if you ask someone in Venezuela, if Bitcoin has value, when they changed their bolivars for Bitcoin 2 years ago, I think they would say, yeah. And so that ability to access a financial system independently when you're in places outside of the U.S. where there's a privilege to being able to have this debate is a real use case that has value as well. So probably better over beer.
And I guess you can kind of take the attitude. You're right. I mean, you can take the attitude if it isn't persuasive, you can simply rely on the fact that it's persuading a lot of others.
But for inherently value-driven reasons is my point. And
Yeah.
just because you can't discount those cash flows doesn't mean that the ability to preserve their hard-earned, money in a local currency is not a real thing. You can't argue that that's not true. It has been true for many, many people.
And this question, some of my clients are crypto curious, but they're not ready to buy Bitcoin or the Bitcoin ETF. What are other ways that I can get them exposure?
Yeah, I think this is a great segue into the active ETFs. I don't think that there are other active ETFs like the ones we have with State Street. We built this suite of products specifically to answer that question. There's diversification. There's only securities. It doesn't touch coins. The volatility profile is lower, but you still have access to the thematic underpinnings of crypto, which are not just Bitcoin.
And this question, will we eventually see another crypto winner?
I think you'll see a crypto winner, but you'll be living in the mid-Atlantic, not in Antarctica.
That's a good way to put it.
I mean, look, the Bitcoin is currently a 42 vol asset. It used to be an 80 vol asset. So if you look at different parts of crypto and where they are in their journeys, whether they're children or teenagers or soon to be adults like Bitcoin, you've seen the vol annualized go down for each of those. Ethereum vol has come down as well, and I think that the violence of the downturns is going to be inherently tied to that. So Bitcoin will be able to go down 30%, but I doubt you'll see a down 90% Bitcoin again, and you just go to where you are in the stack with Ethereum with the same analysis.
This has been incredible content, Steve. Thank you so much for joining us for this event. I also want to tell you that as you probably are aware, I host a daily podcast covering crypto and a lot of other subjects. And uh, on next Friday, December 27th, or maybe 2 Fridays from now, Mike Novogratz from Galaxy will be joining me on that podcast. It's actually my last podcast. As I've announced, I'm ending my podcast series after 35 years.
Wow.
At the end of this year, and Friday, December 27 is my final show. Mike will be my final guest. So you'll get it directly from Mike as to why he left his leadership role as the president of Fortress, one of the largest, most influential firms on Wall Street, to move to crypto over a decade ago, and what he sees for the future of it. So I hope you'll tune into my daily podcast. You can download it everywhere you get your podcasts. And I encourage you to check out more about what Galaxy offers. You can go to Galaxy directly, or you can go to State Street or to Invesco to gain an insight into the products and money management, asset management services that Galaxy provides. Steve Kerrs, head of digital for Galaxy. I'm really glad you were with me here today. Thanks so much for putting this together.
Thank you, Rick. Thanks, everyone.
Thanks, everybody.